Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, today we'll take a look again on Canadian dollar. And we have prepared the weekly research on the Canadian dollar. In general guys, market, especially on the high time frame charts on the monthly and weekly, just confirms the tendency that it's really gravitating to our target. Our target stands in 134.50, 134.70 area approximately. Strong resistance will be. And in fact, right now, the Canadian already stands in the final stage of this long-term setup. Since this setup has started some years ago and even on the downward action that was previously, so we could see the whole picture on the monthly chart. Meantime, market is gradually is approaching to our destination point, and probably this trading will not last too long, maybe a couple of months before market will reach this final target. The fundamental background is also mostly supports the further weakness in the Canadian dollar, so you know about the rate cutting from the Central Bank of the Canada. Also, it's not really good statistics on the fundamental part of the Canada, so crude oil prices also are falling. So I would like to show you the chart that we usually use when we talk on the Canadian dollar. This is the inverse line of the Canadian to United States dollar. That is the blue line, and the red line is crude oil price. So you can see this is recent consolidation that we see as on the Canadian dollar is on the crude oil, and market gradually is continuing down. This very nicely looking relation between these two markets. That's obvious because the Canada is the major exporter of the crude oil products in the United States. They take the significant part of the Canadian economy, so that's why the oil and the products and the oil products very important part of the export of the Canada. So that's why we think that the target, our monthly target, will be hit. But in the short-term perspective, this is a bit tricky situation, guys. First of all, if we will take a look at the recent safety C numbers and on the pictures that we have on the weekly chart, you will see that market hardly will reach 134.70 area just by one march, just by one action, without any retracement. It's just single leg, straight right to the target. Hardly we will see it. Probably market will take the pulse somewhere. And the most probable area where this could happen is an area between 130.80, 131.50 area, right here. Because the pattern on the weekly chart, this butterfly, has the target right at the weekly pivot resistance one. On the daily chart, we have a similar picture approximately, so we have this ABCD pattern. This market already has passed through the 100% extension that was right here, now on the way to the 1618. So that's the next target, and that's probably will be hit. After that, since market at this point will be overbought on the daily and weekly chart, that will be the completion point of the weekly pattern. And the CFTC data suggests that market probably should show some retracement before another leg up. From this area, we expect some retracement down. On the daily chart, this could be really very significant retracement. And as the most probable destination of this retracement, we see this level. It's an area around previous top. This 128 area. Beyond the one previous top here, we have weekly pivot support 1 and 3/8 support of the most recent leg up. So this level is very, you could call it suitable for overall context that we have. First of all, since market is overbought on the weekly and daily chart will be on the next week, applying as the possible target of retracement weekly pivot support 1, but not weekly pivot point, looks logical. At the same time, retracement even to the weekly pivot support 1 will not mean the reversal, because we know that until weekly pivot support 1 holds the retracement, previous bullish trend is still valid. Second, applying the previous top as the support there is a classical issue. So classical tool, no doubts. And finally, since we have here the butterfly also, as you can see this butterfly, we have discussed it previously in our daily updates. Usually when the butterfly hits the target, even if it will continue move high after that, usually it should show at least the 3-8 retracement. That's why using the 3-8 level as the potential target of this retracement also seems logical in the current situation. So this level corresponds and matches to any other patterns that right now exist and do not contradict them. So this is not too deep retracement, this is not too small retracement. So that's the golden center, the possible level that is suits to every other patterns that now are forming into the overall context. Also guys, these levels that I have drawn here are based not at this top, but at this one. So I have drawn it for some perspective at the moment when the market will complete the target and start the retracement. So these levels are a bit higher than those that should be based on this top. Now on the 4-hour time frame chart, guys, we do not see much additional information. So market stands mostly in the upward channel. Here we could add just small detail. So take a look that market right now stands at the upper border of this channel. So it means that probably on Monday we should see some bounce down. At the same time, we said on the daily chart that the bounce should happen after market will hit these targets, but not right now. That's why we think that maybe market in the beginning of the week could show some minor bounce to the weekly pivot point, test this weekly pivot point. After that, continue move high. And only when it will complete the daily targets, it will turn to some really meaningful retracement down. So something of that sort of action is really probable. That's the most tricky moment because it's very difficult to predict definitely where retracement will start and how deep it will be, because we do not know yet how this retracement will start to develop, what patterns will be formed. Maybe a bit later we will be able to estimate it with more precision. But from the other point of view, it's not really a big deal for us from which level the retracement will start. For us, the major point, since we're searching the chances to take a long position here, for us the major point, the destination of the retracement, and particularly speaking, this level as an object for taking the long position here. And where retracement will start, here or there, that's not really important for us, because we do not have any intention to trade market short. We would like to take it long, and that's why, in fact, we do not much care from which level this retracement will start, but for us the major question is where it will stop, and whether 128 level will be as good as it seems right now. So that's our current view on the Canadian dollar. Let's see, the market right now shows an interesting action. It's really very interesting to trade the Canadian right now. It's relatively clear. We have the clear patterns, we have the clear setup on the monthly chart, we know the target. So from that standpoint, it's really very clear and very interesting and nice trading currency for as daily trading and as for the trading on the high time frame chart. So let's see what we'll get on the next week.